Frankly, I've been in the industry for over 30 years and I've seen one of these maybe 4 or 5 times in my career.
Hello and welcome from the sidelines of the ICR Conference here in Orlando, Florida. I'm Jarrett Banks, Editor-at-Large of Exec Edge. Joining me today is Michel Brousset, the CEO of Waldencast. Michel, welcome to the program.
Thank you, Jarrett. Thank you for having me here.
It's nice to have you back.
Thank you so much.
Customer. Well, can you give us a quick overview of your business model and what sets you apart from your competitors?
Of course. So Waldencast is, we're intending to build over time a global best-in-class beauty and wellness multi-brand platform. And I think the way we do it is that differentiates us is we not just create brands, but also acquire brands that are, I think, high-growth, purpose-driven brands of tomorrow. Our business model is a little bit simple and at the same time novel in this industry. We started the company by trying to build the operational scale and focus of the big multi-brand players with the background that I have and many of my team members have that come from big companies, but at the same time the nimbleness and efficiency of independent brands. So we have tried to combine the best of both worlds, the operational scale and discipline of those big companies, but at the same time the nimbleness of that independent brand. And we do that in a very asset-light, efficient, highly responsive to market approach that allows us to be very competitive in the market. And the results of the company speak for themselves, I guess.
Great. Now you recently announced some Q3 earnings. Could you recap your sales and EBITDA results?
Yes, of course. I mean, we had a fantastic Q3 building among a number of quarters now of a strong performance. Our overall growth for the group was plus 34.6% and an EBITDA of 16.3%. And it's composed by a very strong performance across both of our brands, Obagi and Milk. Obagi had a stellar performance in Q3 of 45.5% growth and an EBITDA of 19.3%, what we call brand EBITDA, brand adjusted EBITDA of 19.3%. And in Milk, it grew at 23.5% and an EBITDA of 27.1% of adjusted EBITDA. When I say EBITDA, I mean adjusted EBITDA for the brand. So very strong Q3 results, strong momentum in both brands, and we expect this momentum to carry on through the year.
When you look back to 2024, what are some of the key moments that stand out to you?
Yeah, well, I mean, there were so many because we are a relatively small company in this big beauty space, but certainly our innovation was a point to highlight. In the case of Milk, we have a fantastic vintage of innovation last year. Our jellies launch in Q1 was tremendous. Frankly, I've been in the industry for over 30 years and I've seen one of these maybe 4 or 5 times in my career. Our Elastiderm launch into Obagi was a fantastic launch that propelled us into the day cream space with Obagi with a technical benefit. We had a massive step forward in terms of international expansion for both Milk and Obagi. We launched Milk in Scandinavia, in a retailer called Lico. We launched in the UK, we launched in Latin America. So really a great momentum across both brands, and we're just at the beginning of the story.
Great. Now you mentioned Milk and Obagi. What is behind the success of your customer engagement with these two?
Well, what they have, I mean, they're a bit different brands, but what they have in common, and the reason we acquired these 2 brands, is they're real brands. And what I mean by real brands is that they have a community that has, if you want, a loyalty and an approximation to the brand that is a bit beyond reason. You know, it's in the case of Obagi, it's our physician community. It's a community that loves the brand. It's the #1 recommended physician dispense brand for the most important conditions for which consumers visit dermatologists. 25% of our business is a prescription-based business. And the case of Milk, which is really have a core consumer of Gen Z millennials and now increasingly Gen Alpha consumers that are coming into the brand. So it's really the community. It's the community is what sets them apart. And the reasons for each of the brands are a little bit different, but what they have in common is that.
Now, Milk in particular has a cult following with Gen Alpha. What is behind that?
Well, I think it's a combination of things. First is, I would say, first and foremost, the products. The products are fantastic. They're charismatic. They're clean, vegan, cruelty-free. They are very utilitarian in the sense of high performance. They do what they're supposed to do, but they do it in a way that is quite unique and very distinctive in the market. But also importantly for this generation, is the values behind the brand and what we represent and what we celebrate. It's a brand that is, as I said, not only clean, vegan, and cruelty-free, but also a brand that celebrates the uniqueness of each consumer and its self-expression. We are just tools for consumer self-expression, and Gen Alpha recognizes that. And it's really, we have real momentum and real strength with those consumers.
Now, we're here in January of 2025. What do you expect this year? Is there any possible M&A on the horizon?
Well, we're always, in the market looking for opportunities. We are super bullish about this year. We have, as I said, in these two existing brands, real momentum. There's a number of launches and innovation that is coming for this year. I can't comment too much on M&A targets, but we're always the beauty market has always been an acquisitive market, and we expect this to be an important part of our strategy.
Okay, last question. What trends do you anticipate becoming popular this year?
Well, it's a big question. I think let's just start more than trends. One, if there's a big shift, is in the case of skincare, and in the case of Obagi, this evidence-based, science-based, high-performance skincare is, some people call it a trend, I call it a shift. I think once consumers shift to high-performance-based skincare, they will continue to be hooked into that. Once they go into high-performance skincare, it's very difficult for them to go into non-performance skincare. The second thing I think is increased levels of personalization and the role of personalization, the tools of like AI to help us diagnose and personalize products more for consumers. Another important part of what we're going to see this year and beyond.
All right, we'll leave it there. My thanks to Michel Brousset, the CEO of Waldencast, which is under the Nasdaq ticker WALD. I'm Jarrett Banks, signing off from Orlando.
Thank you, Jarrett.